Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, everyone, and welcome back to Security Token Show, episode 22. My name is Kyle Sonlin, and I'm joined with none other than my co-host, Herwig Konings.
Hello, everyone. Thanks for tuning in and listening.
In this episode, we're talking about TESOPs. It's a relatively niche topic, at least right now, but it's something that, Herwig, you and I really believe this is going to be a very emergent use case for security tokens. And so TESOP, we'll give you a little teaser, stands for Tokenized Employee Stock Option Plans. This is something that is super cool, and we're going to get into it later in the episode. But first, Herwig, how about you lead us off with the news?
And we usually like to kick off our episodes, Kyle, with our companies of the week to highlight those that are making the biggest moves in the past week in the security token space. In this case, we're going to save it as a little teaser towards the end. We do have a main topic article that goes with it. So for now, it's December 10th. Let's get into last week's news.
2019, almost 2020.
Almost 2020, that's right. And to kick it off, we've got a mouthful here, Kyle, but it is some pretty huge news, to say the least here. We have Commerce Bank, Credit Suisse, and UBS successfully executing the first live transaction on the Deutsche Börse's HQLA Exchange Securities lending platform.
Wow.
The transaction entailed the exchange of a basket of corporate bonds and German government bonds between UBS and Commerce Bank, both using Clearstream Banking as a custodian. This was followed by a cross-custodian swap between UBS and Credit Suisse, which in ownership of corporate bonds at Clearstream Banking and the German government bonds being at the Euroclear Bank, were then exchanged without the need for the securities to be physically moved between the collateral agents. The change in ownership was instead recorded on the HQLAX Digital Collateral Registry, which is built on the Corda blockchain. Peter Schmidt, who's the co-head of the repo desk treasury at Commerce Bank, said it enabled treasury departments to manage their collateral pools more efficiently by significantly reducing the settlement cycle and avoiding resource-intensive collateral movements. It is a first but important step to a new ecosystem where tokenized assets can be traded in a DLT environment.
Wow.
Wow.
Can you just give a really high-level translation of what exactly that means? What assets transferred from who to whom?
That was definitely a lot of financial speak, so I'm happy to try and dumb it down here. And essentially what we have is the two main parties here are UBS and Commerce Bank. So first of all, the Deutsche Börse, although involved in the project, is more so actually an investor. I believe they own about a third of the HQLA platform, which is actually based, I think, out of New York, or no, actually Luxembourg.
Huh, cool.
And so they actually are their own separate fintech company, but perhaps it was the Deutsche Börse who brought these third parties in, or it was through the team at HQLA. But at the end of the day, they brought UBS and Commerce Bank together. Those are two major banking institutions combined. They have more than $1 trillion in assets under management. And of course, these two banks are moving money and assets between each other all the time. In this case, it could have been for clients' demands or resizing or rediversifying a portfolio. But in this case, it was likely just a very standard pilot basket for them to test the platform out.
Okay.
And it probably didn't total a whole lot in value, which is why nothing here was mentioned. It's really more about the focus on the technology. And
actually
in this
getting
case,
it done.
Exactly. In this case, what we're actually talking about is a basket of corporate bonds as well as German government bonds, which happen to be custodied by the Clearstream custodian as well as the Euroclear Bank. So we got two different providers here, and in order to go ahead and facilitate that transaction, which is being carried out on behalf of UBS and Commerce Bank, we would actually need to physically move these assets. In this case, we're talking about bond certificates that would be moved between the two and updated accordingly so that there was a transaction and a log, and the banks were able to settle the transaction.
You need a lot of third-party
A lot of
pieces
third
in
parties
there,
involved.
right, to really verify that this happened and that it went from one account to another and across potentially international lines.
Right. So even though you may even have some digital processes enabled, we're still talking about the physical shares and where they are located or custodied.
Okay.
And in this case, because they are introducing a distributed ledger technology using the HQLA registry, the banks are able to skip a lot of the requirements for moving the physical assets so that both banks meet their compliance and protocols and their various requirements to make sure that their constituents are satisfied with the security and their custody of their assets. So this is a major step, as it was highlighted by the Commerce Bank lead there. And now, because it's on chain, as Peter Schmidt had alluded to, they will be able to tokenize these assets more efficiently, and of course on this new digital exchange much more efficiently move the goods around, or the baskets of corporate bonds and government bonds in this case, in a much easier, much more streamlined manner, because it's now all in a completely digital DLT-based environment.
Right. So the idea is that since we've taken these, let's call them analog assets, these assets that are not currently logged by the blockchain, and we don't have the full scope of this thing in the database that these large investment banks share with one another, which is what we would call this blockchain. Since we're taking these assets and now putting them onto the blockchain and putting everything that there is to know in terms of valuing and auditing this specific asset on chain, now it should be easier to tokenize because we have all of the information right there in a way that we can trust. So the first step is taking that asset and putting it on chain. And then once you're able to do that, now you can create the vehicles that really allow for the speedy transfer between not only investment banks, but potentially the rest of the financial market.
You nailed it, Kyle. And to highlight something that you mentioned there, furthermore, this is built on Corda by R3. This is a private blockchain that is being used by these various banks. This is not something that we can go and look up per se without the right permissions to see information behind this tokenized instrument. But at the end of the day, it's clear proof in the pudding that they're working. The parties involved are excited. The first live transaction happened in 2019, not 2020 here, which is very exciting. And even more so, Kyle, there are 15 other supposed market participants checking out the platform, including the CIBC, Citi, Goldman Sachs, JP Morgan, ING, and many others. So very much so we're going to be keeping our eye on this platform. This certainly seems like a very institutional solution for major banks.
Fascinating stuff. I think you did a great job of breaking it down. Certainly that was an incredibly dense article and just fact set there. And it's very exciting to see these huge banks that are talking billions and trillions of dollars of assets combined. These institutions are all looking at how to leverage proper asset transfer, which is quicker, more efficient, and more cost effective. And you know that once they can really get this thing watertight, it then flows all of their other assets, and it's only something that's really going to come in a torrential way.
That's the expectation, and it's not just big institutions now, Kyle. It's also governments. We had talked in last week's episode that China had plans for announcing a security token framework. Over the past couple of weeks, the government has become extremely bullish out of stealth on blockchain technology as a whole. And actually, just last week, they also announced now, surprisingly actually, that they've already tokenized $2.8 billion worth of government bonds. They were a 2-year fixed rate, 3.25% coupon, designed for small and medium-sized businesses. So it's the first officially recorded transaction on the blockchain by China and the state-owned banks using distributed ledger technology. And it came out as a surprise because actually a lot of the attention has been on the fact that the Bank of China also intends to develop and issue a stable coin linked to the nation's yuan currency.
Wow.
So that's pretty big news, of course. That has a very opposite approach, in fact. But their release actually was to say that, hey, we're going to focus on this digital currency before we release this STO framework and start kind of enabling the issuance of digital securities. So perhaps the public or even the outside can't yet leverage security tokens, but certainly the Bank of China and the Chinese government already is. And I'm sure we'll be hearing a lot about their stablecoin very, very soon.
Very, very interesting stuff there.
And it's an opposite reaction, as you know, Kyle, because here in the U.S., there have been a lot of people up in arms about Libra and private stable coins and the threat to the Treasury Department and both our nation's currencies as well as capital markets in general. And not surprisingly, China has also said that they see Libra as a threat and that stable coins actually should only be issued by governments. And it's an interesting stance because we have been talking now a couple of weeks about a bill that was introduced in response to the hearings of the Libra investigation. And the Managed Stablecoins, our Securities Act of 2019, has gotten a lot of people up in arms because if you haven't been listening, if you're a first-time listener here, if you don't know about it, the bill aims to classify stablecoins as securities in essentially what is an attempt to stop Libra from being able to deploy their private stablecoin. And as a result, it forces essentially all stablecoins to be labeled as securities, therefore requiring registration with the SEC, and pretty much destroying a lot of the flexibility the currency needs in order to operate, function, and grow. Many see this response as destructive and obviously stifling innovation, and also a move that simply exemplifies the politicians' ignorance around the subject of cryptocurrencies, ICOs, securities, and stablecoins. And naturally, I tend to agree here to say that stablecoins are not meant to be designed as securities, and that passing this bill probably will hurt U.S. competitiveness in future financial markets, especially when it comes to the future sort of DeFi world. And I believe, strong opposition will end up kind of calling this built out and hopefully stunting it out, maybe trying a different approach when it comes to working with Libra. Needless to say, Kyle, it's ruffled a lot of feathers. It's scared a lot of people on the potential financial power of Libra. So that's why all of this is playing out right now.
Yeah, it seems like this is the stable coins and this whole movement of building tokens. We've already gotten this ball rolling, and it's something that as a nation you can either be forward thinking and embrace the technology because there's so many tremendous benefits, as we've spoken about, even just in terms of efficiency and cost, let alone the fact that you're now KYCing everybody that is holding your token, that there does seem to be value there for a government if they were to embrace something like that. So it does seem odd that the initial reaction from certainly from the U.S. politicians has been to shut it down instead of trying to work with it and build something mutually beneficial for everybody. But we'll see. We'll see how it goes, and potentially if a different country does launch a stablecoin like China, who knows how the response will be from other financial jurisdictions when they see they've got competition now.
Certainly for our consistent listeners, we'll be on the lookout for any type of movement with this bill. Next up, we are going to continue sort of that same trend of is it a security or not, which is being played out in a lawsuit against Ripple, which is the third largest cryptocurrency by market cap. We cover the ramifications and the lawsuit in depth on episode 8 of the Security Token Show. But for those of you who didn't catch the episode, the long story short of it is that Ripple is being sued for selling a security that wasn't registered with the SEC to the public. And of course, I'm referring to the XRP cryptocurrency, which was issued in an ICO in 2013. The lawsuit claims that XRP is in fact a security and not a cryptocurrency, and that as a result, the company has committed a number of violations that they need to make up for to their shareholders. The ramifications that we discussed more or less could be that it leads to multiple other cryptocurrencies being labeled as securities, which expectedly would also lead to more lawsuits and more issues, and potentially force the SEC to address the issue with some sort of token framework, which we've seen dozens of other countries now implement legally. So the latest update regarding this case is that Ripple is trying to dismiss it once again, under the reasoning that one, the statute of limitations, which legally is defined as 3 years for financial securities issues, has expired, and even if it was a security, that it wouldn't apply because it has expired, the statute of limitations. And two, that the plaintiffs only purchased XRP from exchanges in 2018 and not in 2013, where their ICO took place, so they aren't even the affected party by this so-called violation. So Ripple seems to be taking the stance that this has no merit and they're trying to get it dismissed, naturally so. And it does seem like some pretty strong logic in terms of what they're bringing out here. And it's certainly good news for Ripple if they can get it thrown out. And we can expect to know a little bit more at the latest on January 15th when their next hearing is scheduled.
We'll keep you posted. These things take forever. I wouldn't be shocked if it gets dragged on and on and on. But again, statute of limitations is statute of limitations. So if they can get that held up, then that seems to be interesting.
But big ramifications if it falls the other way. Classified
That's
security.
for sure. That's for sure.
Definitely, again, if you're interested, episode 8 to go check that one out. Next up, we have an announcement from Horizon Globex, which is an issuance platform out of New York, that's announcing that they're launching a 5 million Series A round to help develop out the platform. Specifically, we're talking about them, of course, improving their existing infrastructure, but it's also to develop out a marketplace with an ATS licensed broker-dealer partner, as well as seeking a MiFID license to operate and serve European clients, giving them a much more global reach. However, I'm talking about this in the news and not as an STO because it is not a tokenized offering from what we can see. The company is not necessarily eating its own dog food here, but they are doing an equity crowdfunding raise, so you can definitely go check that out if you're interested. All the links and all the stories that I cover during the news segment, as well as everything on this podcast, you can find in the description from wherever you're listening, or you can go directly to the source at stomarket.com/news and participate and contribute your own content. Last up in the news reel, I want to give a shout out to the Securities.io interview series, which recently released an interview with Christian Platzer, who's a co-founder and managing partner of Black Manta Capital. Black Manta Capital actually took my company of the week back in August when they were awarded a MiFID license to go ahead and start issuing STOs in Europe. Since then, the company has announced several partnerships, including with Tokenized and Digimax, and their main effort is to bridge Asian and European markets. So it's a great interview. If you're interested in learning more about them, definitely go check that out. And with that, Kyle, that's the end of the news. I'll hand it over to you.
And so now we're moving into specific security token offerings. What's the newest of the new in the primary offerings, the ones that are now coming out, the ones that have closed their rounds, and then, of course, the secondary market. So first up, we've got some updates on previously mentioned security token. This one is specifically from an STO called Grape. And so they are a Croatian bike manufacturer. I believe they're looking to build smart vehicles, but they're focusing, at least with their initial products, on bikes. And they actually closed their blockchain managed IPO, as they call it, which is a security token offering, on the new fund platform, and were able to raise 1.4 million euros in their offering. And so Grape actually closed a 5 million euro Series A round last year or this year. And so this was actually not the focus for them to raise as much money as they possibly could. This was more about raising through the new fund platform and successfully distributing this blockchain managed IPO, as they're calling it, but again, which is a tokenized equity, really is a security token. So the equity security token offering was able to attract over 1,000 investors from 34 different countries with a minimum investment of $100. So again, this is an awesome opportunity for an investor to buy into a futuristic bike company and developing cool technology, only needing to put $100 in and still being able to be an investor in that company. And so according to the timeline on the new fund page, the offering will be issued on February 5th, 2020. So I'm not fully clear on where that will be exchanged. I think especially this is based out of Germany, new fund. There is not a live security token exchange there right now, so I'm not exactly sure. Maybe it's through the new fund platform, or maybe it's distributed to wallets and there's a peer-to-peer style of exchange. I'm going to do what I can to see if I can figure that out. We'll certainly know more in February. But on top of that, you may recognize the name New Fund because New Fund, who is the issuance platform that Grape is leveraging, also conducted their own security token offering this year. And so they announced that the holders of their token that they had originally invested will be receiving a payout of 3% of the capital raised and 2% of the equity issued from Grape's successful offering on their platform.
Neat.
So the New Fund token holders, in addition to the where they're originally raising from, were also entitled to 3% of the capital raised and 2% of the equity from Grape, and presumably of the next offering that they also announced, Black One Entertainment, which is, they call it the Funkhouse-backed one-stop entertainment system. And so that's about all they gave to us. Funkhouse is a large digital marketing firm in Germany, so potentially this firm is backing Black One Entertainment for a security token launch. But certainly new fund holders, I'm sure, are happy right about now getting their distribution and excited to see there's another one coming out soon.
Kyle, I got to chime in here and say this is a very cool offering. I love it. Not only do I remember you covering Grape, I think they even had Porsche as an investor. They're a very edgy company. But at the end of the day, I think it's even cooler to highlight the application of security tokens, because traditionally you would not have seen a company like New Fund offer equity that also directly is getting a payout of equity from a company that is one of their clients, right? That simply would be too complicated as a management, as a governance issue to manually pay out investors and track shares across a number of company layers now. It simply wouldn't be possible. But thanks to the security token, this is all streamlined. It's very clear and transparent, and it's all doable. So, shout out to New Fund and to Grape for this very cool relationship that they have between their offerings, as well as congratulations to them for raising their capital.
Yeah, it's fascinating. It's really exciting. Just if you're listening, I mean, the reality is this is how it would work. If you were an investor in New Fund, you would own your New Fund tokens, presumably in their wallet. And now, because you're a holder and you've done absolutely nothing, you actually now check into your wallet and you'll see, oh, there's 5 Grape equity tokens that I'm now exposed to. And then the next offering and the next offering and the next offering, you're getting additional access and diversification to all of the platforms in the platform you just invested in. It's pretty cool. It's exciting. So congratulations to both of those teams. Moving forward, we have a couple of new security token offerings. The first one being from Max Crowdfund, and Max Crowdfund is the tokenization and crowdfunding arm of the Max Property Group, which currently services about 75,000 accredited users globally, and it has a portfolio of about 7 million euros of assets, as well as operating 4 property funds in the UK, Netherlands, and Germany. So this is a European property group. They've got a lot of real estate, 7 million euros in real estate, as well as they manage funds in the UK, Netherlands, and Germany. And so they're actually looking to raise 3.75 million euros for about 20% of its shares across 5 different phases of 750,000 euros each. And so over 70% of this first 750,000 phase has already been subscribed, and the soft cap of 500,000 has already been reached. So they've at least successfully raised that first, I guess it's close to 550 or 600,000 euros, and they're continuing to raise until they hit that $750,000 cap. I'm not fully clear what triggers each phase of that investment. There was no real information on that in terms of when the next round gets unlocked, whether that is a discounted tranche and that this one is cheaper, or if the next one is a milestone-based thing. I'm not exactly sure, but they're getting close to that $750,000 first tranche that they were aiming for, which is super exciting. And so their real estate platform is going to boast a $100 minimum investment for investors, allowing anyone to invest in their real estate portfolio or into other real estate properties. And they're also currently finalizing the compliance piece of it as well with the Dutch AFM, which is the Dutch Financial Authority, that they are anticipating to be approved by December or early January. So presumably they will have this license even before they finish their fundraise, and then they can actually begin to go and launch their product. So congratulations to Max Crowdfund. They've hit their soft cap, so they are a successful security token raise at this point, and I will keep you updated on what that looks like moving forward.
Awesome.
Additionally, we've got a friend of the show, Smartlands, who is digitizing their own equity, and they actually launched their plans for their own security token offering here in the US. So if you remember Smartlands, they tokenized a couple real estate projects in Europe. They had a student housing property in the UK that fully sold out. They had a few other projects that they were working on as well. And they're now looking to raise just under 4 million euros at a 12% stake in the company, which would value the business at around 28.6 million pre-money. And so while their fundraise, most of the fundraise, it seems like will be focused on VC and crowdfunding platforms, they are opening about 3.5% of their equity, which is basically €1 million of a tranche for their current users, their current investors, and the people that are leveraging the platform. And so this is in full compliance with Reg D and Reg S. So U.S. investors, as well as their previous UK and European investors, will be able to participate in this. And the funds are going to be used to expand their asset base for of all of their tokenized assets, as well as working with further development of their Smart T payment product and applications that we had discussed on previous episodes. And so they're currently taking pre-orders. It's actually not fully live right now, but it was just announced the other day, and it was contributed by the community in the stomarket.com/news aggregators. We appreciate people including us in new announcements. So that's awesome. If you want to check out more, it's equity.smartlands.io.
Smartlands, I know, has been a past company of the week. They're clearly very active, and I think it's worth noting here and interesting. They're based out of UK, and it seems to be that they're doing their STO in the US in terms of leveraging US exemptions to issue their equity. So I think that's really great to see that even foreign companies are still using US markets to issue their security token. I just think that it's also interesting because they are primarily focused on the European market. Now I think they've also made some partnerships with broker-dealers here in the U.S. in order to help grow their international investor base.
Totally. You hit the nail on the head there. And finally, we've got La Osteria, which is a German-Italian restaurant chain. They obviously, they're a pizza place, but they do a lot of other food as well. They've got 120 locations across Europe, with about 100 in Germany, and I think 6 other countries as well. They have multiple locations, including the UK, France, and more. And La Osteria is actually selling a fixed income bond offering, giving investors a fixed 6.25% yearly interest rate paid quarterly to raise 2.5 million euros through a security token for 3 new franchises. So they're looking to scale their operation, open 3 new pizza places, and they're raising a debt security token with a 6.25 corporate bond structure, and they're just moving forward with it. They're launching on the crowdfunding platform called the Capilendo, and the fundraiser was actually about a month ago, and it's still live today, and they've raised over 1 million euros to date. And so the bond is set to launch on January 10th, and will have a maturity of 3 years. It's a 3-year maturity. You get 6.25%, and then obviously at the end, you get your money back as a debt offering would be structured. So fascinating. More excitingly is the fact that they've published some of their financials. And in 2018, their last complete year, they had just under 68 million euros in revenue with an EBITDA of more than 8 million euros. And 2019, they're expecting about 86 million euros in revenue with a 10 million euro EBITDA for 2019. So this is a strong company with positive cash flows that is looking to scale their operations through a corporate bond structure security token. And it's very exciting. Franchising a cash positive business is an amazing use case. It's a pretty exciting asset from my perspective. Obviously, this is not financial advice. You need to do your own research on these things. But I think it's a great example of some high quality asset that is leveraging a security token. Herwig, I don't know if you have any other thoughts there.
Well, for those of you who don't know, Kyle and I are huge pizza heads. So I think it's great. Just earlier we had pizza. I think it's super cool to see a major chain like this. This reminds me a lot of the securitization done by Cadence with Fat Brands, which is the burger chain out of LA that did a $30 million securitization to also raise capital in order to further expand their franchises and, of course, pay back investors In this case, for the Fat Brands deal, I believe on franchise fees, and in this case, it's more structured like a traditional corporate bond, which I think is interesting, but also cool that you can now invest in multiple different chains, that it seems like, and again, further proof that even though this company, as institutional as it is, it's probably going to do $100 million in revenue in 2020, could easily go to the major institutions or potentially the public markets for this type of capital, and they have decided to leverage a security token offering, which I just think is awesome.
Yeah, it's very, very exciting. So we'll have to see how that goes and what that closes at. Best of luck to that team and super exciting stuff. Moving into the secondary market, as always, all of our news and pricing data is sourced from stomarket.com. And so for T0, we always talk about T0 first in terms of performance because they consistently lead with trading volume. Unfortunately, it just continues to really crash. It's down another 10% today. It's sitting at 76 cents a share with about $5,000 worth of daily trading volume. Again, down from $10 of their initial launch price. There's just not much else to note here. It seems like we keep going back and forth about what we'd like to see, and hopefully that they can hang on. But it doesn't seem like a lot of their investors are very confident in the token. Other tokens that we know they're live are really not seeing a ton of trading volume. It's still relatively illiquid aside from 1 or 2 trades a week, I think, per token for the open finance tokens. But it is important to remember that Realty has now a second real estate property on top of the first one we've already announced. They now have 2 live that are currently trading to international investors on Uniswap. They may also have opened up maybe one, if not both, to U.S. investors through the Uniswap platform, or I think it's through their platform, something like that. Definitely go research their Realty offerings through their site. We're also working hard to get that access, the trading data and stuff there, and we've heard that the demand has been pretty strong. So the Realty tokens seem to be doing well, but they're structured a little bit differently than what we've seen from some of these open finance and T0 tokens. That leaves us with the total security token market cap sitting at about $77,500,000 and looking okay for this week. But I think it's time to move forward into our main article, our main topic of the week, which again is TESOPs. And so the article here that really sparked the conversation today is that the financial giant Fidelity is piloting a tokenized employee rewards initiative with Tokensoft. And so Fidelity recently announced this pilot with Tokensoft for an employee rewards initiative. And this was announced through a Tokensoft blog post, and we can really infer that the token itself, which they're calling the BBT token, was created with Fidelity's Bits and Blocks Club, which is a branch of the Fidelity Center for Applied Technology, which is where they're really spending a lot of their innovation resources on leveraging this technology. And so Mason Borda, who's the CEO of Tokensoft, goes on to say that in the post that Tokensoft integrated the BBT token contract into Tokensoft's administration platform, which can then be used by financial institutions like Fidelity so that their employees who can use the BBT token in a closed-loop reward system that's designed to encourage employees to attend internal events and other activities. And so this is fascinating because they're looking, Fidelity is looking to reward their employees for attending events and internal participation and rewarding their employees for whatever they want them, however they want to distribute that token. And they're looking to supply that to the token by leveraging the blockchain and issuing this closed standard security token. And so in the announcement, the BBT token is defined as a ERC 1404 token. And ERC 1404 is an interesting standard that Tokensoft developed on top of the ERC 20 protocol, which is Ethereum, if you're familiar, with the goal of defining a common definition for the technical structure of security tokens on a blockchain. They wanted to build this 1404 and make it the least complicated. From a lot of what I've read, their goal was to make it simple and understandable, and that we can all build other things on top of it if we need, but we need to get a few common things down to agree upon what is a security token in terms of its structure, which Sounds good to us because we spend a lot of time looking to define security tokens from the financial perspective, and so it's cool to see that a lot of these different issuance platforms, whether it's Tokensoft or Securitize's DSO protocol or Polymath's ST20, they're looking to provide these smart contracts on top of the Ethereum protocol that really help define what an asset is. And so just if you're interested, there's plenty of information on what an ERC 1404 is and how that's different from ERC20. I think realistically the most important pieces here from a highly technical level is that the ERC 1404 standard allows for restriction of distribution of the tokens. And so it allows you to use the ERC20, which is super common and understandable for programmers, and then you can take that traditional token structure and say, look, okay, we only want to give this to specific employees, or we only want these specific people to be able to transact with us something, or in the case of any scalable security token, we only want accredited investors or specific jurisdictions to be able to trade this thing, and that's the standard that Tokensoft is built on top. And so, because of that, we are actually looking to give out our company of the week to these two companies. Herwig, for me, my company of the week is going to be Tokensoft because they're the tech provider. They're the partner to do that, taking a leading role in contributing to the common definition of security tokens. And I can let you go into a little bit of your thoughts on Fidelity.
Yeah, no, I'm absolutely, truly excited about this use case. It's something that I've spoken about at universities and even the Fortune 500 companies. And it is one that I think is less talked about in the security token hype of everything. And that's because this is really what I've seen as the first use case. So I want to make it Fidelity my company of the week because they are truly pioneers. It is not explicitly clear that this is a tokenized employee stock option pool. But as you have highlighted, because it is an ERC 1404 token, it's hard not to assume or link the two and make the connection, right? So even though there may be reward-like or non-securities-like behaviors for this token, it is in a closed-loop environment, and it is on the ERC 1404 standard. So it would be pretty easy for them, if it isn't already, to turn it into a fully functioning security linked to Fidelity stock.
So we've used this word TESOP a lot. And again, this is something that you've spent so much time researching and developing. Can you explain to us how would a TESOP work in reality?
It's a great question. I usually like to structure it in sort of from three different lenses. In this case, I'm talking about startups or new businesses or small businesses, private companies, really, medium and up, and then of course public companies. And so for a tokenized employee stock option plan for startups, it is almost just a more efficient way to manage their traditional employee stock option plans, which are either done in a very ad hoc kind of as they hire employees way, or they've structured something typically because their venture capitalists have advised so, or because they're experienced entrepreneurs and they've dedicated a pool of shares for their employees. Regardless, it's always a manual process. It's a manual analog process that is typically very inefficient. And so by digitizing this process, they can already take advantage of managing their shares for their employees, and they're specifically issuing stock options and things like that in a much easier fashion. But furthermore, it also benefits the employees more. In this case, we're talking about actually giving them liquidity. For a startup, it's still the same issue as the same reason that investors are excited about security tokens, which is stock options are liquid. They are only ever really exercised when they're either about to expire or in the case of an IPO or some kind of liquidity event like an acquisition. Now, through either a partnership with a third-party exchange or simply by developing their own private market, these startups can now offer some form of immediate liquidity to their employees, which again is a huge benefit that specifically for startups is not something they experience commonly. And the same can be said for private companies. It just really, you amplify the problem 100 times over. The use case I like to give in this case is actually the super grocer chain called Publix, which is actually the largest employee-owned company in the world. It has over 200,000 employees. That's because even their grocers get stock within the company. And you can imagine it's the same issue. They are managing an ESOP for hundreds of thousands of people in a dramatically, manually, and inefficient way. And there is definitely a same issue of a lack of liquidity because Publix is not listed on any public exchange where they can simply assign the shares for their employees to go and sell off on. And so, of course, whether it's Publix or much, much smaller companies, whether you've got hundreds or thousands or tens of thousands of employees, again, digitizing your employee stock option plan has a lot of efficiency benefits while also creating liquidity benefits for employees. And of course, finally, there are the public companies, which also benefit from that same digitization because they already act like semi-private markets and also suffer from the same issues of scale that these major private companies do, which again is because their governance controls are typically largely manual. So all in all, I think TESOPs are a terrific example of security tokens because you can highlight both the governance efficiencies of digitizing and managing a stock option plan, but you also get that value of liquidity and being able to create a market for those shares. Just imagine if you have hundreds of employees and maybe even those employees have different stock option plans and strike prices because of the time that they've been at the company. In this case, we see Fidelity using it as a way to incentivize internal participation at events. Perhaps it could be used for other activities such as doing peer reviews for fellow employees or other internal actions. It could even be used in the future to even send someone's compensation on chain through the same sort of account system that holds both your tokens that represent your stock options as well as potentially how you get paid. So there's a lot of ways you can even go very advanced with a tokenized employee stock option pool with a TESOP. But this is, we're early days here, Kyle. We're keeping it to the bare bones. At the end of the day, simply tokenizing an existing ESOP, we believe will yield many efficiencies both for the company as well as for the employees. Hopefully that makes sense. Any comments or questions, Kyle?
I love it. I love the idea of it. I think it's fascinating. I think the one thing that we can highlight as well is that in both of your examples of private companies, when we're talking about startups or when we're talking about the largest private companies that are employee-owned like Publix, they don't need to necessarily have these tokens on a live public exchange. They can have a private buyback system that allows for their employees to either buy more stock if they want to buy more stock from other employees, or the company itself could buy back shares. It doesn't necessarily mean that they have to go public tomorrow and that the only way that this works is if you go to an exchange and start your thing trading to everybody. It doesn't necessarily need to work that way at all. This essentially, in terms of tokenizing your ESOP, is really just about managing your employees. And if you've got 200,000 employees that are all shareholders, being able to manage each one of those shareholders in a more efficient way is incredibly effective, incredibly useful. I'm sure it would save them a ton of money in terms of managing that, whether it's through manpower or writing scripts and programs that can actually programmatically do things, as you said. It's a fantastic use case. It's really, really exciting. I know that there are some companies in the space working on cap table management and some of these other processes. And it's exciting to see that Tokensoft and Fidelity are working on a project here. I'm sure that it will be successful because we love the idea and think that as long as they can structurally build it correctly and actually leverage it for their program, I'm excited to see the results.
Me too. I'm sure this will kick off many other interested, specifically, I think on the larger side, corporations, both private and public, on how they might, leverage a TESOP. And with that, that's our show today, everyone. Thank you for listening. As always, I hope you tune in again next week. And as always, please leave feedback, comments, reach out to us on Twitter, LinkedIn, as well as directly participate on our community at stomarket.com.
That's a wrap. Security Token Show, episode 22.